when you're looking at a linear rental property, I don't know if you should be asking if the property itself is cheap or expensive. I think you should get there, but I think first and foremost, you should ask yourself, is the cash flow from that property cheap or expensive?
Yes, good
And then,
question.
especially if you're using leverage,
Mhm.
I would start with, is the cash flow cheap or expensive? I would second go to, is the leverage or is the mortgage payment or interest rate, is that cheap or is it expensive? And then probably
Mhm.
third, I would ask myself, is the house itself cheap or expensive?
Mhm.
And
And
I,
most people, the sad part, George, that was beautiful the way you said that. Most people simply analyze the house. Is it cheap or expensive? And they
they
do
don't even
that.
analyze that. They just
Yeah.
they don't analyze, is this house cheap or expensive? They
Mhm.
analyze, is this house going up or down in
Right.
price?
Wrong
Totally,
question. Yeah. Yeah.
totally.
Right. Yeah. They invest for the trend, which is not the way to invest because when you get the house, you get the mortgage, the house, and the stream of cash flow, and those are three different aspects of the investment. So yeah, very well said. Very well
Yeah,
said.
even right now on my live streams or in the comments of my videos, I'm getting a lot of people asking me whether they should still look into a linear market right
Mhm.
now, maybe a or house hack with a fourplex or a
Sure.
triplex. And I'm telling them, listen, I'm a little more apprehensive now than I was a month ago or 2 months ago, but I think it still boils down to the numbers. And this is the
Mhm.
advice I'm giving people. I'm saying, if you have a perfect property right now, that's got fantastic numbers, great RV ratio, obviously you're getting cheap debt, it's in a good school district, you've got all these things that line up, it's perfect.
Yeah.
I would go ahead and probably pull the trigger. If you don't have a perfect property though, then I would go ahead and kind of hold off to see how things play out. But again, the
Well,
point,
perfect is a hard metric because,
well, I'm
what
not,
does
yeah,
that mean?
perfect.
Yeah, right.
Yeah,
Yeah.
I shouldn't have said
Right.
perfect.
Yeah.
I should say, if you've got a phenomenal deal where
Mhm.
all the numbers make
Yeah.
sense, it's in a
Right.
great area, great neighborhood, and it's an asset that you want to hold on to, regardless of what the price does for the
Right.
next 20 or 30 years. If you've got that lined up, yeah, go ahead and pull the trigger as long as you're getting a fixed rate mortgage. But if you
And,
don't have that lined up,
uh-huh.
if you're just out there kind of searching around and, well, maybe I should do this, it's not a real great property, but maybe it works,
Right.
then I'd probably hold
Don't
off and see how it plays out over the next few months.
don't fit the square peg into the round hole,
Yeah, yeah, exactly.
type of thing. But 84%. Now, uh, there's a question as to what the definition of this is, but 84% of the United States lives in urban areas. Okay. Now, that doesn't say what is the density of that housing.
Yeah.
And after this scare blows over, and I think we're going to see this big migration into these suburban areas. I think the burbs are coming back big time, and then we're going to see another plus for the suburbs when the self-driving autonomous car gets here. And who knows how long that'll be exactly? It might be 3 to 5 years. I don't know. It's been
Yeah.
delayed, obviously, with
Also, it may be delayed quite a bit
right.
longer too, because of, if we have the credit markets freeze
Mhm.
and if there's not as much access.
R&D slows down. Yeah,
Yeah.
yeah. I liked one of the charts you showed recently, where you compared the value of the S&P to GDP, which
Yeah.
I thought was a really good metric.
Yeah.
The
Perfect.
other metric I really like when it comes to stocks is PE ratio, price to earnings ratio.
Keep
And
ratio.
all of you know I don't like stocks. I think Wall Street's the modern version of organized crime. But nonetheless, I'm an opportunist, and when the right deal comes along, I'll be doing it. Okay, if you can make up for if you can offset the premium of violating my commandment number 3, which is thou shalt maintain control, where you relinquish control to somebody else. If the price is right, it could be worth it. Okay, so um, PE ratio and value of the stock versus GDP, I think, is a very good metric. Any comments on that before we move into these graphs?
Yeah, they call it the Buffett indicator.
Hmm.
And so it's the market cap relative to GDP, which makes a lot of sense.
Oh.
If you go back to the 1980s, the early 1980s, that's when the market was really cheap. The
Hmm.
market cap to GDP back then was only about 30, 40%.
Hmm.
As of a month ago, when the market was close to its all-time highs, that just to give you some context, it was at 150%.
Hmm.
And again, going back to why we should all, no matter what asset you're looking at, why we should always start with the question, is it cheap or is it expensive? I see so many people online right now saying, should I buy the dip? Should I buy the dip? Should I buy?
Yeah.
This is a great opportunity. It's crashed 33%. This is a great opportunity. But what they're not asking themselves is the question that we just talked about. And if you look at the market cap to GDP, you'll see that it's still not cheap. It's still probably, and I don't have it in front of me. I haven't looked at it in the last couple of days, but let's call it 120% of GDP. Well, that's not even close to a historic average.